Thanks very much for bringing us all onto the stage. Thank you to colleagues who sat through the video. And I would like to make this session interactive as possible. We have an excellent set of panelists here today to tell us about where is the money. So not only show me the money, but where is the money? And more importantly, how do we connect those pools of finance with those opportunities to put the money to good use? That's really the topic of the discussion today. And before I introduce my panelists, because I promised I would one by one, I want to share with you a story from my very early days. After I was at Cornell University, I was doing my PhD, and I went to Brazil for a little while. I did my research in Brazil. And while I was there, someone said, could we borrow some money from you? And I said, well, I only have my credit card. It's very expensive. It's like 20%, you know. They're like, 20%? Well, yeah, it's like 20% for the year. And they said, well, here it's 20% per month. And I thought, 20% per month in Brazil? And there was a huge market there, of course. I didn't take advantage of it, but I could have pulled my credit card for the 20% a year and made a lot of money, because in Brazil at that time, capital was very scarce. And I think that's a story that we might see repeated over and over again. How do we get to those pools of capital, which are estimated around $400 trillion of assets, into the hands of entrepreneurs? And so today the panel, who is here to my left, will help us answer that question. And we will start with, excuse me while I pull this up. We will start with Kalina. Let me get your bio here exactly, Kalina.
I'm disappointed you don't have it by heart.
Yeah, I know you very well by heart, but Kalina Miller, she's the Financial Institutions Group at the International Financial Corporation, part of the World Bank, but working with the private sector. Kalina is Senior Investment Officer in Bangkok. She has responsibility for IFC investments and portfolio in the financial market players in the Mekong region and distressed assets in Asia Pacific. That sounds interesting. She has global experience with investment transaction in various sectors, including support of financial institutions and climate finance. Prior to this appointment, Kalina worked with the IFC out of Hong Kong, Mexico City, and Washington. So a lot of global experience. And thank you very much, Kalina, for being on the stage with us today. I'm going to kick it off with a question, and then we'll come to each of our panelists one by one. Of course, Hong-Sing, everyone knows, because she moderated the last session. But we will come to you, Hong-Sing, because I think there's things that people don't know about you in your work with crowdfunding. So, Kalina, a very broad question. I've sort of already alluded to this, but there are large amounts of capital out there. Why are they not going to those startups and entrepreneurs who have these good ideas for the economy of the future, for low carbon consumption, or for the way that consumer preferences are shifting, people who want to buy products which might be sustainable and also good for them? How do we make that connection? How do you see it from the IFC?
Thank you very much for having me, and I'm happy to share our view, which is one of the aspects of the entire financial sector. Before I answer the question, just a little bit of a context, and Stephen, you alluded to that. We are financiers, so the way we look at the world is, first of all, at looking at the ticket size. Is it worth our while? So number one question that each one of us asks before we invest time and effort in something is, what is the market opportunity? And you said some $1 trillion worldwide. I wanted to put it in the context of Thailand. How much money are we talking about? What is the investment potential, which will determine why we should care? So based on the government of Thailand's commitments under the Paris Accord, we are looking in between 2018 and 2030 at $2 billion. So certainly, this is a good enough number to make it worthwhile for all of us to care. Then looking at the challenges, in order to understand the challenges, I think what's really important to understand are the various players in this market. And I think the video presented this quite well, explained, the two sides of the financial world, which is the supply side and demand side and the people in the middle. So just briefly, on the supply side, you have people like ourselves, IFC, which are part of the World Bank. We are a developmental institution, which is putting money for good use to keep the world a better place, so to speak. You have private equity money, you have venture capital, you have people that are working with donors to connect and present and create bankable projects that the banks, traditional banks and DFIs like ourselves can then fund. And then you have also all sorts of alternative other channels of financing that are arising. On the demand side, you have not just the entrepreneurs or people that you have people that have an idea that hasn't even become anything yet, right? Something that's conceived in your backyard, you don't even know how to take it, from there. You have large corporations that are looking to do large projects, so you have the full gamut of demand. And in between, you have people that are connecting the dots. They're different, they have a different role. You have the regulators that are obviously creating, the enabling environment, which is where all these players operate in. Policymakers, which are setting the tone and incentives for the various market players to play in the right way. You have crowdfunding, people that are finding new opportunities and connecting the dots, the democratizing funding. You have a slew of additional other players in the middle. So each one of these has a different role to play, and each one is contributing to this new revolution that I would say is starting up, both in Thailand and globally, to take advantage of this opportunity to connect the dots and connect the assets with the demand with the supply side. So at IFC, we have been working, and part of the World Bank Group, we have been working on this for a very, very long time. The World Bank, for those of you who don't know, is essentially a think tank created to help governments. There are two aspects to the assistance. One is financial assistance, so essentially putting your money where your mouth is, and the other one is essentially policy, thought leadership at the government level. At IFC, we work, just as you alluded to, the financial sector, the private sector, so we're essentially helping corporates and private enterprises because the private sector is the engine for growth in any country. So what we found with this sort of long intro, what we have found based on our work for a very long time is the largest challenge that we see is the lack of knowledge of the two sides. So people simply don't know one another. They don't know the opportunities. They don't know how to connect. They don't speak the same language. They don't understand each other's expectations. So that's where the connectors come in. This is where people like Angela can help, present something in a way that makes sense to us. And in my role, I find myself, and sometimes when I tell my kids, what do you do for a living? I say, well, I'm a teacher, right? I teach people. I explain to them why does it make sense to do something. You talk to regulators. You explain to them why does it make sense to take global experience and make a difference, to incentivize people to do something different, to make a change. You talk to bankers. I work in financial sector, so I speak with big private commercial banks and try to explain to them why is their business case for sustainable finance. So this teaching role is one of the key things that we do. We teach institutions. I work with banks because this is how we get a larger impact. I teach them about it, why does it make sense, and then they teach their own clients, and this is how you create this ripple effect and make a change in the overall economy. And we also put our money where our mouth is, so we also do investments. Again, investments, I work in financial sector, but my colleagues work throughout the spectrum, the gamut, from small venture capital investing, also to very, very large infrastructure, manufacturing, agribusiness, the entire gamut. And we've done a lot in this country. We hope to do more. It's our mandate to do even more. About 30% of our balance sheet, which is quite large, needs to be committed to climate-friendly investments. So we will continue to do that job, the teaching, and trying to stimulate also the other players, the key players, to create on the regulators particularly, to create some incentives. Because when you talk to the private sector, people want to see the bottom line. Change takes a lot of effort. I'll give you an example with green bonds in this country. We had worked with one bank last year, TMB. They issued the first green bond in this market. It took a lot of time and effort. It was a huge leap of faith of their leadership to see the potential and the need and why does that make sense for them, why it makes sense for the economy. It's a lot of cost, expense for staff, time, dedication, because they have to do something different. Majority of people simply say, if there's no constraint, if I don't have to do something new and different, why should I do it? And that's where some of the other players come in, creating tax incentives, putting together ways through some additional funding to offset the initial cost that is needed for the various players to essentially come up to speed with a new opportunity to be able to make it bankable and contribute. So we're starting up. It's all of us around, not just here, but all of you, a small revolution, making a change one step at a time. I'm very optimistic that would happen. And by teaching, putting our money where our mouth is, each one making our contribution within our respective sphere of influence, we can make a difference.
Thank you. Thank you very much, Kalina. And we'll come back to some of these ideas that you're putting on the table about how do you get the money flowing and how do you connect it to the bankable deals. You mentioned, Angela, that you're working in this space as well. Angela Chen is a research fellow at Ikipeo. Am I pronouncing that right?
Acapeo.
Acapeo. Okay. Acapeo. And basically what she does is she looks at deals and she analyzes them. So she says, is this deal up to snuff? Are the analytics good? Is this something that investors can put their money into? I'm paraphrasing. But what we really want to hear from you, Angela, is, what do you look for, right, when the deal is coming to you? And then how would you get it to a state where, let's say, they could take it to the IFC or they could take it to other investors and make it fly?
Okay, great. Maybe I'll just start by giving a bit of a background about Acapeo. So we actually recently rebranded. We were previously called Impact Capitalist. So Acapeo is a Toronto-based capital advisory firm focused on sustainable production of soft commodities in emerging markets. So we work in a variety of areas. So that includes doing capital raising for sustainable projects. We do capital markets advisory for financial institutions that invest in the space. We also have done portfolio development for impact investing project. We are also right now actually in the process of raising our own fund that's going to focus on climate smart agriculture in sub-Saharan Africa. But in Asia Pacific, right now we're working with the Gordon and Betty Moore Foundation. They're a large US foundation focused on conservation, on developing an innovative financial mechanism in sustainable fisheries and aquaculture. I focus mostly on the ocean space, and that's why now I'm actually based in the Philippines, scoping for investable projects in ocean plastic, which has seen tremendous momentum in the last year and a half. So also, I guess what would be helpful to sort of, jump off on what Kalina talked about is to give a bit of background on what blended finance really is. And that concept is not necessarily new, but it's something innovative that we've seen in the space. So blended finance is really a combination of public and private capital of money coming together for a development outcome. And oftentimes there's some element of a subsidy where the public or philanthropy dollar will come in to make the deal more amenable for private players. And that could come in a variety of different forms. So that could be subordinated capital contribution, which means that the public money will come in first, and they will get their money last after the private players. Or it could be a sidecar facility for technical assistance that supports sort of the transaction, or it could be a loan guarantee that de-risk it for the private players. So there's a variety of different ways in which blended finance could happen. And when we look at, I guess in our space, so let's say an example from my work, in the sustainable fishery space, there's a lot of interest from capital providers to invest in the space. And fisheries is almost like the holy grail, even in the conservation space, of solving that, because it's so difficult. Tragedy of commons problem is such an old age industry. That's a prime example where we're facing, this deal flow problem that we talk about of like, how do we deploy the money that's on the sideline that's interested. And there's been a lot of talk about using blended finance models and approaches to solve that problem. But I think one thing that we do need to acknowledge is the fact that there are fundamental economics with the project that can necessarily be overcome by just project structuring or the financial structuring that come with blended finance. So in the fishery space, for instance, there are about 11 funds that are dedicated to the space. More than half of them cite challenges or difficulties with building the pipeline for deals. And there is an economic case that is made on paper by a lot of different players, the World Bank included, on private capital coming in and helping with the fisheries transition, the recovery. But really very few deals have been executed. And one of the most cited reasons that, it takes resources, it takes upfront capital, it takes a lot of technical assistance for the deals to happen, and that's true. But the bigger reason is the fact that the fisheries exist in a broken system, lack of governance, very weak enforcement that makes private capital very difficult to come into. Not to mention sort of the poor data that exists in the space. It's like very difficult for somebody, when you say speaking the language of investor, to come in and not see those type of things exist. And so when we look at, let's say, crossing that barrier, from a financial standpoint, fisheries is really about a restructuring play. So you're looking at removing permanently, let's say, capacity from the system and implementing, policy management changes that will create a more efficient industry. The key element there is still the policy change that needs to take place before capital can come in.
Yeah.
So that's one. And then the second one, when we talk about these type of deals, is there needs to be some sort of support on the transaction cost. We're talking about smaller markets, shallow markets, where after the due diligence cost, and you say, is it worth it? Sometimes it even may outweigh the returns from some of these projects. So we need to have different innovative ways to bring down the transaction costs.
Are you going for a market that has consumers who want certified sustainable fish, for example, or are we talking about just going out and getting whatever you can get out of the ocean? Are you sort of aiming towards a specific market segment?
Yeah, it's really interesting you mentioned that. I think our experience in the impact investing space with fisheries is more on the smaller deal sizes, where you were really looking for a premium market to exist for a sustainable product, which then would, make the deal make sense. And that really touches upon, I think, a fundamental challenge with, investing in sustainability, where the cost of sustainability is just higher. Right now, sustainability is a luxury thing at the consumer level. You go into a store, you see the regular fish, like, we don't know where it's from. You see the sustainable fish with a label on it, and you look at the price. There's going to be a big difference, and it's going to matter for most people. And especially when we talk about the Asian markets, for instance, there isn't so much traction with the labels and the premium for sustainability at this point. So when we are looking to scale those type of approaches, we can't just we can't just go from that premium market, sustainably sourced angle, and cherry picking sort of deals that would make sense.
Right. So you can't take it as a given yet that the market is there. In other words, the deal has to stand on its own feet. Well, it's very interesting. I'd like to come back to you, Angela, but shift now to Hong-Sing. I'm going to skip to you, Hong-Sing, and then we'll come back to Shailesh. So Hong-Sing works in crowdsourcing. That's another one of her talents, in addition to moderating panels, which he did very well in the last session. And Hong-Sing, just a little bit about Hong-Sing, because she didn't tell you last time. She is from Singapore, but she now has got regulatory approval for crowdsourcing platform here in Thailand. So she's ready to go live, and she's looking for those opportunities. She's also very much ASEAN because she covers more than one country in the Asia Pacific. So Hong Sing, can you tell us a little bit, the market is not quite there. That's what we're hearing from Angela. The needs are there, the capital's there. How do you try and connect some of these different dots together? What part of the market are you looking to service, and how do you find the people that have those ideas that can take them into practice?
I think the very key conversation is we take a walk back in memory lane where crowdfunding actually started. It all starts with a conversation where entrepreneurs are seeking out for funding and they don't have enough collaterals. They go to the bank, they get rejected. They couldn't really pitch that well or dance well on the stage. They get rejected. Or VCs or the traditional ways of funding basically look for a certain kind of business and they don't get funded again. So back in Silicon Valley, actually, there is, the whole start of the conversation where crowdfunding was actually initiated with, people like Kickstarters or the Indiegogos of the days where, small little item, they needed some kind of a capital and then they raised the funds and maybe among a few friends and then they start to contribute. Then, of course, come the technology part, where using technology, they get to reach out to more people in the global scene. With that said, today, in the crowdfunding scene, Kickstarters actually have raised more than, in fact, 2 billion just within 6 years. But maybe I can see a show of hands that how many of you actually have contributed on a crowdfunding portal? 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, okay, the numbers. Oh, here. Okay. You see, so it's getting more popular. Why is that so? It's not just about the funding mechanism, but it is a very powerful platform where it actually helps the entrepreneurs or the startups to get feedback from the industry on how well their product fare, how well they could tweak and change by getting all those feedback. But again, coming back to the context of connecting the dots, by leveraging over the internet, you generally have the whole world to play the game. You are not restricted. And in the case of crowdfunding, there's a stream of different kinds of crowdfunding. The Kickstarter conversation is basically a conversation of donation or a reward model. What exactly is donation is you do it for the cause of love. You do it for the cause of you want to see something changing. You do it for the cause of supporting maybe somebody in the action, a movement. So in that aspect, you're not expecting any return at all. And in the context of Thailand, the best way to look into crowdfunding, but offline crowdfunding, which is like many of the Thais actually go all out to contribute in the temper. 10 baht, 5 baht. But with all this accumulation of the huge number of people contributing the same amount, you actually have a large sum of money. And in fact, the temple here are pretty rich. But I don't know how they manage the funds anyway. So, that means of crowdfunding is also another means. But here today, when we talk about the online crowdfunding, the use of word like crowdsourcing, it is as good as you are also sourcing for suppliers. You're also sourcing for partners. You're also sourcing for, extra support from the industry. So it's a very powerful means of platform. And when we move on to talk about from the model of contribution donation model, you then move on to the next stage where we call that the reward model, where you contribute money, in exchange you get a product return, just like the Kickstarter model, okay? And with that said, a lot of startups today, they do not know. In the old days, business is such that you need to produce in large quantity. But today, the entrepreneurs or the startup can actually pre-collect the capital or the funds before they produce the product. And given a certain timeline, they are to deliver the product. So in short, they actually get the capital first before they actually have to deliver. So they get the money first, then they produce and they deliver. And guess what does it tells you? The level of trust that the consumers have on the platform to actually procure this item online. I mean, there are probably one or two of the rare cases that had a little bit of fraud that didn't manage to deliver, right? And moving on, from ideation to productization, and now with the conversation of, thank you, Stephen, for sharing with the audience that we just gotten our conditional approval by Security Exchange Commission of Thailand after moons of pursuit of this approval to operate in Thailand. So this crowd investing, we call that crowdfunding equity model, is such that companies of a certain size, we look at companies at the growth stage to actually raise the funds for them. So there was this question by Kalina and Angela that says, why would they go to a crowdfunding platform? What are we solving? Is those deal flows that comes to us are typically, they have huge potential, but they just couldn't articulate, or they just, do not know how to structure that whole entire conversation. And so when they go present to the traditional provider, finance provider, they just get rejected and rejected and rejected. And most of the cases that's on our pipeline right now is all rejected by the traditional VCs and the banks. So that is quite good, VCs and banks continue to reject, and then we get a chance to serve.
Very interesting. So you're really a disruptive element. And in a way, in alternative finance, and I think we alluded to this earlier, and certainly in the video as well, technology is disrupting as well. It's enabling people who are looking for money to go a bit more broadly. And so Shailesh, I want to come to you, and we will come back for a second round. Shailesh works for a venture capital fund. It's called Massive. So that gives you a sense of his ambition, is to go massive. And it's also an incubator, if I understand correctly. Shailesh is coming to us from India, from Mumbai, and looking at firms that have those ideas, the technologies that will really upend markets and create these new products and services. How do you see that disruptive process? How is the niche changing the space in which you're working, the space in which crowdfunding is working, and how does it complement traditional finance?
I think there's a huge opportunity for the funds. As Kalina will tell you, that there are always more companies looking for the fund than the fund my finance available. If you see the overall evolution of a company, it goes from a various stages, from where at a very early stage they need what you call a point of validation capital, right? Which is very small, it goes up to from $100,000 to $500,000. Now, lot many angel funds provide that, lot many family offices provide that, but crowdfunding platform have also emerged as a what you call alternative source of capital. The idea is that as the beauty of this is that it allows a lot of people, as Angela put in, that who are not able to articulate their idea well to the seed stage VCs are able to go there and do that. The other advantage is that a lot of sectors which are what you call out of favor, especially like manufacturing or making some devices, generally are not in the favor of VCs. Do get favor in this crowdfunding models and are able to do and demonstrate and have the chance to get larger capital for the funds like us. So I think it fits beautifully with the venture capital model, because if you see the capital innovation model, the first model, which is the POC model, where the angel fund, seed fund come, then the disruptive companies get money from the VC funds, and once the business mature, when it goes into what you call in a boring phase, gets the large banks and everything who provides debt, because the risk profile changes a lot. And it's very essential to remember that the risk ratio for the early stage will remain high. as well as the return. So my expectation when I am investing in a company, I'm always expecting to get almost 30% IRR, right? While Kalina will looking at 8% or 10% depending on their fund profile. And we do get, but overall the fund returns around 25 to 26%. Still, like say in our, I have done now 4 funds. In my previous fund, we almost wrote off 50% capital. In the next fund, we again wrote off 50 to 60% capital. So my write-off, so despite all our experience, everything, we still write off close to 50% of our companies.
That's interesting. Can you give us an example of a winner? So maybe something where you are getting 30% rate of return.
Yeah.
And maybe an example of a loser as well, where you
Losers
just
are
had
many. So we have a company which used to sell bus tickets online, and it came to us when they were selling 1 ticket a week online, right? Now, bus ticket in any emerging country can be a very painful issue, right? Because it's just not a bus ticket, it's basically your certainty or uncertainty. So either you go to the bus and fight for a ticket and everything for a seat, and this company said, okay, I will sell you bus tickets online, right? And we put, I think less than $500,000. We put $500,000 in that company, then it raised subsequent round of funding, and we sold it around 6 years later to Naspers, which is a South African company, for $160 million. So we made around 40x on our investment. So it's not 30% IRR, I think we made some 100% IRR. Right? And when we sold, and we sold cheap, because within 2 years, that company got almost $1 billion, right, after our selling.
Incredible.
We invested into a car trading platform in 2006, and we put $500,000, and we sold it close to almost, we made 10x, around 25 million. So there happens, right? So we have been lucky. And there are a lot of ideas which happen, which are ahead of their own time. So we suffer them all the time. But the beauty of the fund is, beauty of venture capital is that it allows for failure. It allows for error, which is not allowed by what you call larger institutions, right? And when there is a scope for error, it creates an opportunity for youngsters, for the people to dream and go and do something which they think can happen. And what happens that many times you feel that, okay, what if it will fail, which all will fail, but what if it will fly, you know? And when it flies, it creates a hope and change the whole scenario. So this guy, who was a very young engineer, just wanted to book bus tickets because he was going to native hometown. And he said, why not, I set up a company for that. And today he's a millionaire, right? So that thing happened, right? And I think that's why we fit in a very, very important role as far as venture capital is concerned in solving larger problems. Today, if you see in the world, in the US alone, I think US is the champion when it comes to venture capital. Almost 22% of the jobs come from the venture capital industries, venture-funded companies. You look at any innovation in the last 30 odd years, it has come from a venture-funded company. Either it is Microsoft, it is Cisco, it is Apple, it is Alibaba, it is Taobao, it is Didi, it is Grab. You name it, there have been a venture capitalist money riding that. And I think that the same thing has coming to these sectors because disruption can only come from the risk capital, not from anything else.
Well, it's very interesting, you know, to hear you say that, and also thinking about the markets that we're talking about, right, where we have green markets or consumer preferences which are shifting, which are not certain, right? They're not entirely certain. That's what we heard from Angela. But we have a feeling, as the ambassador said at the opening, that things probably will go that way as awareness changes and people want food that's non-pesticide full and drinks which are good for their body and so on. So the markets are emerging, and that's probably a very fluid situation. I wanted to remind people in the audience that 2 things. One is that this session is followed by entrepreneurs who are going to pitch their startups. So in a way, they're probably listening to all of you very carefully right now because they want to come to you afterwards and pitch to you. So I hope you stay on for that session. And number 2, if you have questions, you can put them into Slido. Apparently, this is how it works. You put them into Slido, and then we put them on the screen. So Tor, if you're there, I actually would like to pause for a moment and just see if there's any burning questions for any of our panelists here. We'll just take a second to look. Okay, any recommendations to the bank on why they should fund sustainability-based projects? They usually refuse. Oh, here they are. Wonderful. My second iPad. This comes to e-waste pretty fast. Okay, this is a loaded question because it says they usually refuse. I beg to differ because I think they often say yes. What do you say, Kalina?
before I answer the question, I just wanted to stand up and defend the banks a little bit. I don't want them to be presented as the bad guys. Oh, look, the banks are rejecting everybody. There's enough to be done. There's a piece for everybody, and there's a good reason why the banks are rejecting some of the deals they're rejecting. Their risk appetite is different. I mean, they are required by the regulator to not take certain risks for the safety of the entire financial system. So we don't want to have Lehman Brothers 2.0 and the scare that took on the entire world, as you remember. There was an anniversary just recently, 15th September, yes. So yes, yes, they're not really the bad guys. And bankers are actually a good, just like venture capitalists, are a good litmus test to try on ideas and see if they would fly. So sustainability is, I think sustainable projects are not necessarily something, Stephen, as you said, that the banks would reject. People are starting to really realize more and more that sustainability makes good business sense. Let's define sustainability, because it's one of those buzzwords that a lot of people talk about, but there's not a lot of consensus on what it really means. There's typically two aspects to sustainability. One is financial sustainability, so it has to be able to walk eventually, stand on its own feet. And there's also environmental social sustainability. That is essentially ensuring that whatever you do is not going to impact negatively the environment.
Kalina, can I jump in?
Sure.
Can you give us a concrete example for IFC of something that has really taken off and created sustainability in the sense that because you mentioned the other day, and financial, but I'm sure you have a whole different, just to give a sense of, what you actually do finance.
Yeah, so when we look at projects, we look at both sustainability elements. And the business case for the environment and social aspect of sustainability is becoming more and more important because it affects the bottom line. I will give you an example, not so much on things that we finance, because this is part of our general requirements for anything that we've approved or funded has to meet this. But why does it make good business sense? I mean, we'll get the example of Laos and the tragedies that happened. You would remember about 2 months ago, the hydro dam that collapsed, and that cost lives of many people, that actually affected financially the viability of the entire project. So taking the right precautions, being aware of environmental, social, governance risks has a dollar sign attached to it and makes business sense. So many of the banks, it's a large movement, they realize the importance of it. They realize the importance of it for a number of reasons. I mean, they call it triple bottom line, right? Which is profits, people, planet. So you have to ensure all of these are important, because if you look at the world myopically, and I know I'm preaching to the choir, if we don't have a planet 30 years from now, it doesn't make any sense. Even, if you don't look at all these risks, they will not make, what you do, your business is not going to make sense sooner rather than later. So bankers are realizing that. Depending on risk appetite and regulatory constraints, some things we can and sometimes we can't do, but then you have enough other people in the space to fill the financing needs.
Yeah, and there's these tremendous movements as well. For example, net impact financing, right, which looks at the total net impact of the portfolio, or the carbon portfolio decarbonization is another example where banks are really getting serious about their footprints, if I can put it like that. So we have a couple of other questions, but you're going to have to get quicker with your questions, because we're going to turn now to our second round. And it's actually one question that I'm going to pose to each of you. And it's this, and again, it goes to concrete examples. What is the one innovation, the breakthrough area that you're seeing for the segment of the market that you deal with, that you think is coming, but might need a policy push? It might need a nudge. So that one area of innovation that you see coming, it's almost like your message to the policymakers, right? for your area of the market, and what would it be? And I will tell you that there are colleagues here, including Isabel and Dirk and others from UN Environment, who will take these messages into ministerial conferences where they will get airtime. So I'm going to start with you first, Hong Soong.
Okay.
You're on the wild fringe here of alternative finance. You know, what's the one policy message that you would like to carry through? And also, if you could give a little example to make it concrete, why it would be that.
I think in the context of this whole online crowd investing, in the Asia or the ASEAN context is that we are so lack of sharing information of, for example, KYC, know your customers. When we do the process of whether if it's a social work, fundraising, or a crowd investing particularly, is that we have to do a lot of the manual processes. It's very different from America and from Europe, where there is a provider that actually offers you a validation of the investors, whether if these are real or not. In fact, what got me to actually look into crowdfunding, I mean, I have a security background, cybersecurity background for 2 decades. It was the conversation on money laundering on the crowdfunding platform. And personally, for Sinwatana crowdfunding platform, we did have an experience when we were doing a fundraising for Sri Lanka project, where on the second last day of the project, somebody rang us, I mean, the project owner rang us and says, you know, my donor is trying to put through the fund and we can't get it through. And I said, let me check with my technical people. But there was nothing wrong with the platform. But to only realize that the funds that they were trying to load into our platform was a 8-digit fund. And that got an alert where I said, where is this money coming from? And it's coming in from Canada. And when we start to probe further with our Sri Lankan project owner, generally, when she tried to reach out to this Canadian guy, firstly, PayPal can only accept 7 digits. So that was like...
8 digits is quite a lot, isn't it?
Yeah. And then that basically also, you know, really proves my suspect and also confirmed that it is true that if there is no mechanism to secure the system and to validate the system, there's this high tendency that, you know, potentially crowdfunding platform can be wrongly positioned and wrongly used. Mm-hmm. Having said that, you know, the policy or the conversation that I really hope the person in charge here is going to bring forth to the ministerial conversation is the ASEAN conversation or the APEC conversation of a KYC is very vital, because currently it's only the banks that are having these kind of data. So for us as a crowd investing platform, we generally have to qualify and qualify and qualify with all the necessary information and documentation. So a technology standpoint, we are looking into a blockchain technology that we are seriously digesting and brainstorming with our technical team and some third parties to ensure that these part of the information are properly managed. That's on the eKYC.
So let me just paraphrase.
Yeah.
Know your customer. So in other words, a little bit of better data quality about who you're transacting with would help you as a crowd funder.
Yes.
And there's a government policy there because it probably has something to do also with privacy and data and these kinds of things, or where's the angle? Where's the ask for the policymaker?
The policymaker currently, as far as Thailand is concerned, such kind of information is, held by the banks. Mm-hmm. I mean, the banks holds this kind of credential or this kind of information. There are also the clearinghouse that also have this kind of information. Probably certain government agency have some of this kind of information. So as for our case, we need to collect things like, let's say, for example, you come on board and say that you are an investor. Yeah. All right. You need to submit your proof that you have this kind of credential in order to be able to invest in the project. So we do have that tedious qualification.
So you don't have this information yet?
No.
Okay.
No, so we have a lot of work. Back end, we have tremendous work that we need to do.
Yeah.
Yes.
Okay, that's okay. Hold that for a minute. Know your customer. That's a breakthrough area for crowdfunding. So Shailesh, coming to you, venture capital. What's the breakthrough you see coming? What's the policy nudge that needs to happen?
All these large problems, especially in the climate change, innovation, challenges, sustainability, will be solved by innovation, right? There's no doubt about it. The innovation will drive that.
Technological innovation.
Yeah. So, right, technical innovation will solve it, like say, providing the fish which is cheaper and sustainable, right? Because that's the solution, right? If you continue to sell what you call expensive and sustainable, it won't work. Yeah. You have to provide cheaper and sustainable, right? And that only technology can do that. Now the innovation can only be supported by capital, right? And that capital has to be risk capital. If you ask banks to do that, that is, you are looking at lemon 2, right? So it has to be provided by the risk capital. Now the regulator, now the policy issue is the regulators have to worry how to provide better for the risk capital guys. So the venture capital who are raising capital, either the CSR money is routed to them, or they are able to raise from the government as an anchor, and then they raise the private capital, or the private investors who are investing in these funds get a better tax treatments. Because we are accepting that it has to be risk capital. The probability of failure is almost 80%. And so the person who is putting this risk should be able to, account for, get a better tax benefit for that. I think it's a very focused benefit. I'm pitching for a fund, but that's what it will change the game. Because until as you put the capital, you look at the worst of his problem. Look at driverless car. 10 years back, you would say, are you mad? If I say there's a driverless car, today see what the price. So capital has been able to solve it. So if enough capital along with enough innovation goes, it solves. The idea is how to provide the capital there. Should government give it? No. Because as a taxpayer thing, government has other jobs to do. The idea is there's enough private capital sitting out. The HNIs, ultra HNIs capital today is around $14 trillion. $14 trillion. Even if 10% of this is allowed to put into what you call riskiest assets, even 10% of it is around $140 billion. And the word whole venture capital allocation in a year is not $100 billion. So it's 1.5 times more than that. I think all the sustainability problem will be solved in no time.
So it's very interesting. So in a way, Angela, we're coming back to you because you're touching on something which sort of speaks of blended finance, some kind of fiscal instrument which would make it more palatable for an investor to take the losses involved in venture capital risk. There's a discussion to be had there, but I'm not going to push you on that right now. I want to come to you, Angela. So your breakthrough and innovation area, how do you see it, for the market segment that you're working in, and perhaps, you're sitting in between, let's call it alternative finance, which is now growing at 245 billion a year, and that might be a conservative estimate, and traditional finance, sort of the more traditional banking sector. Yeah?
Yeah, so I'll say two things. I mean, on the comment about, mainstreaming more of the players into the space, like there is still that catalytical support element that we see is very important. Of course, that needs to be done really well, because then you might be, subsidizing something that shouldn't be subsidized, and then in a sense crowding out some of the more private money that would otherwise done the deal anyways. That's a constant issue of what is the additionality of this impact money, what is it doing?
That was the debate that I wasn't going to have with
Right,
Shailesh,
that's a different panel.
That's okay, we'll come back to that.
Yeah, so I think now we're in the beginning of the market where the different players are trying to figure out that roadmap of, what is the smart way to put that catalytical money. That's something that I think I see as something that's going to be needed for the next little while, as we try in these various spaces where we have very bespoke interventions, where we need to put in a lot of time and brain cells to figure that out, that for that to still be the innovation that needs to be supported from public and philanthropy dollars. I will also speak a little bit about, almost to answer this question, because we are a thematic player, so we also work with more of the mainstream players on food. And one of I think the bigger innovations that have moved a lot of mainstream institutional dollars into sustainability has been, the alignment of, let's say, using SDGs as a framework to talk about risk and and really give people a more, active way to look about, or to look at impact. So in the ESG, environmental social governance space, there's been a lot of growth. Now $1 in $5 under management is in ESG. A lot of that is passive. Similarly, in the green bond space is a tremendous growth since 2007, something like $250 billion in issuance by the end of this year. But really, investors need a more sort of standardized way across the board to have those more active conversations. And I think it's not necessarily a sexy innovation, but definitely bring the SDGs into the fold has created the opportunity. When we talk to, let's say, financial institutions and banks about sustainable food supply chains and the business case for incorporating that into their decisions on the supply or cost of capital to these players, we talk to them about two things. One is on managing the downside risk exposure they have to unsustainable production. And two is on the upside opportunity in financing the transition that's going to be required. But even with those things, what we need to look for is a way to translate the environmental risk opportunity into something that's operational to the company, to the production, that then would be financially material. And there are a lot of barriers to getting that translation, that change to happen.
Okay, so hold that for a second. Mostly talking about the supply side, right? How to unblock the sort of the constraints on capital. So the seed funding got that. But what about on the demand side? So what about the markets themselves that are shaped by consumer preferences and the policy nudges that might be needed or required there to firm up the markets that will make the revenue flow to your deals?
I mean, I think I agree with the fact that the cost of sustainability does need to come down from productivity that's either technology driven or is sometimes it's policy driven for that enabling environment to happen. I think in Asia we have a pretty interesting dynamic where the average age in Asia Pacific is 29. In different countries it's even lower. In the Philippines it's 24, 25 for instance. So in the next 10 years when we're talking about the consumption increasing or doubling, we're looking at young people who are going to start families that are going to behave in a certain way. So I think that to me, I mean, this definitely, I'm not an expert in this space, but that to me is thematically something that's attractive as an investment theme of looking at what young families are going to want to consume and what sort of lifestyles they want to have.
Yeah, very interesting. Okay, Kalina, coming to you, the breakthrough area, the innovation area, and sort of the policy nudge that would be on your wish list.
There are many, many things that can be changed depending, which part of the spectrum of players you're touching. I will just touch upon one for financial institutions, and particularly in Thailand, the green bonds we talked about, because this is a good way for the big players, the banks that have 80% of the assets, to essentially, push that downstream. You have to give them an incentive to do it. And the issue, for those of you that don't know green bonds are essentially plain vanilla bonds, but the requirement is for you to ensure that these assets are in fact green. And you have to monitor them, and you have to report on the emissions that are going to be saved as a result of the investment. So it's a little bit more work for the banks. That's why they don't want to do it. If there's a guideline, as Angela mentioned, on how that's done, so that it's unified, and then the supply side investors that have that money and requirement to meet these needs, have the clarity and assurance that it meets their standards and there's uniformity. That would help. If you also give them some incentives to the banks to go ahead and do it, that would also help them push them over the edge. Singapore is a leader in that space, and there's little things that are done, such as creating incentives for listing. So if you list a bond that's validated properly, the cost of that validation and issuance is going to be paid by the government. So those are small things that don't cost that much that can make a big difference.
Yeah, reducing the transaction costs.
Correct.
And the informational costs. Okay, very interesting. Thank you for your innovation area. I'm going to come back to you at the closing remarks, that one take-home message, and that can either be for policymakers or it can be for a more general audience. But I do want to give the audience their chance, and now I see you've got 15 minutes. Thank you for situating me. So we've got a bunch of questions here on the stage. I haven't digested them yet, but I'm just going to look at them. Let's look at them together. And I think some of them are sort of targeted to different members of the panel. Okay, so we covered the one on the banks. Here's an interesting one. How do we ensure that sustainable finance is not just about green startups, but really ensuring browns, small and medium-sized enterprises, are getting access to efficient technologies? So that's really about the bottom of the pyramid. That's about the informal sector. That's about an area of the economy that might not have access traditionally to finance. Yeah, on the floor as well. They're a little hidden. Let me turn this one over your way, Shailesh and Hung-Sing first, because I think we're talking about a part of the market that typically hasn't been served. What we're talking about here is those SMEs, small and medium-sized enterprises, that might be producing inefficiently or producing a lot of waste, effluents, whatever. How can we get capital to them? How do they access the kind of finance that they might need to make that switch, either in their production technology or also to improve the kind of product that they're delivering? And the question here is really about the technology. How do they get access to the technology?
Sorry. So when it comes to technology upgradation, generally it doesn't fall into venture capital preview, because we are looking to invest something which is going to disrupt the market, which is going to create a massive alpha and change the way the whole things function. This is more of what you call a debt program, investment interest rate driven program, which can be financed by as a project finance by a bank or something else. And I think there's enough capital available these days for technology upgradation, for changing to reduce the pollution brand. In fact, companies are coming up which are providing this pollution as a service. Like say in India, they are setting up textile parks where the whole pollution is managed by the textile plant owner, and you can set up your facility. So they are SEZs, what you call special economic zones, where the whole pollution is offered as a service, and they help you to upgrade to the next level, because buyers want to buy through them, because buyer doesn't want to go and invest and inspect all the time, right? Whether this is sustainable or not. Like H&M and all are very, very keen on that. So there are already companies doing that. But again, all this come into what you call a project finance kind of things. Venture capital, as a venture capitalist, I won't be looking at somebody just want to upgrade, until that technology upgradation will help you to capture the market.
A totally different shift. Okay, Hung-Sing, do any of these people come to you, or would they ever come to you?
Not at this point, but actually that is an area that we are keen to look into for the company in the brownfield to think green. I'll be the first to go start discussing with them, because, while looking into transforming their company from whatever situation that they are in to move towards the context of a low carbon emission or, a better waste management, these are rare. I would love to work with all these kind of companies, because I'm very good in structuring and redesigning how they can actually work. And that's the purpose of actually crowdfunding. And, we don't have a hard code rules that we only want a certain way of work, but rather the coming from for crowdfunding, it actually comes very much from the heart to serve. To be able to enroll the crowd, to also see that these companies really wanted that transformation. And at some point, when we are able to structure the whole entire conversation, we can then bring it to, let's say, people like the VCs, or if the project gets up to a certain size, I could even talk to TMB. So I think every of such kind of companies, if there's such a companies, please come and discuss. There are ways to work if you are so determined to make that change and that transformation. I'm not saying that we are a magic or fairy godmother, but it's just that, from the brown field to want to go green, it is very encouraging. Yeah. And we should encourage more of such kind of companies.
Well, that's really good to hear. And, you know, it links back to our last UN Environment Assembly was on pollution and health. It was very interesting to link environment and health because once you start thinking about the environment, not as something abstract, you know, far away, but actually something very tangible, which is my health, my children's health. And then these kind of investments look much more interesting, right? Because I don't want a factory in my backyard that's producing something that's going to affect my health. I want to move to another question to give our audience their due. And the one that caught my eye here is, what are the success criteria of a bankable project to reduce plastic in the ocean? So why would a bank be interested in reducing plastic in the ocean? Who in plastic value chain stands to gain from their project finance? So Angela, for you
Really
first.
good question. Something that occupies my time recently. So first of all, I want to say, you know, when we look at plastic, we can't actually just only look at plastic. And that's the first discovery I made after I got here. Like, I care so much about the ocean. Let's solve the ocean plastic issue. That is a very small fraction of the actual waste that's being generated. Emerging countries, we're looking at anywhere between 50 to sometimes even 75, 80% of all the waste being organic. And that's food waste. So in Asia, plastic is only about 15% on average. And so we do have to look at the entire waste management system as a whole. And right now, waste management is a government service. It's a net cost to the system. So again, there are fundamental economic issues with that system of who's making money. So in the beginning of the chain, we have the collection system. That's a net cost. The next, we have recycling, which is the part where we have some players that are profitable. And of course, now there are changes in the market with sort of policy changes that have happened. And at the end, we have disposal or treatment of the waste, which is, again, typically have been a net cost to the system. So overall, in order for the entire system to get more funding, we do need to improve the economics of the system by investing in the front, in the collection and segregation, things like that. So more of the bankable, infrastructure type things are at the end, where we're looking at, switching just the pure disposal of, let's say, open dump sites to facilities where you could actually, you can have some value from the waste, whether or not that's, different forms of waste to energy. That's not incineration. The policy element is very strong in that sense because you do need, again, operating in a space where it is a government service. You need the support of the government. And also with any of the waste to energy things, you need a PPA agreement with offtake. So
I'm going to paraphrase just a little bit and just say, without a government frame, the market will probably never be there.
Absolutely.
For ocean plastics.
Absolutely.
In other words, if the government doesn't somehow say, we don't want it, it's not allowed, you're going to have to innovate around this as a parameter, as a constraint. You probably won't see the kind of innovation that needs to happen. At the same time, it's very interesting. Our executive director was in India for World Environment Day, and Prime Minister Modi said, no more plastic bags or single-use plastics by 2022. Now that's a very strong signal from a government that's probably going to have entrepreneurs thinking about what are the alternatives. Kalina, you started the conversation, at least our informal conversation, about creating markets that aren't necessarily there. There is a question here at the very end that I want to throw to you, and we have to wrap up after this one. It talks about, to support sustainable development, banks could assess the viability of projects based on the following order of precedence: planet, people, profits. So in other words, profits as a third-tier criteria, or planet as a first-tier criteria. How do you see that? How unrealistic? What a dreamer statement is that from a bank's point of view?
Well, the reality is that banks need to be there to make profit because otherwise the depositor's money is at risk. So profits could never be at the end. It could be for organizations like IFC, for which we do sort of on balance assessment of our portfolio. We have a sliding spectrum as a developmental institution of profit versus impact. So some projects are very, very impactful, but we really can't make money, but you will make a difference. So we go towards the scale of more impact. So others are more profitable with a little bit less impact. Overall, if as a portfolio, you have the right mix, so you stay in the green and you're not going to go under, is an institution that works. Unfortunately, we don't have the pressure that banks have, which is to make money for shareholders, to increase shareholder value. So they are not going to be able to have the exact same way of assessing the priority of these three.
So you have a fiduciary responsibility to your investors to maintain the value of their assets over time. Profits have to be there. And yet, the framework in which you play, if I can put it like that, is determined by the markets themselves and by the governments that shape the markets. So again, coming back to the role of government and the nudge. Shailesh, I see you wanting to come into the conversation. Was it on this point or something else? Yeah.
When she was saying on the plastic point, I
Yeah.
think that's where the VCs would love to come in. If somebody can do a breakthrough into packaging of the plastics, right?
Yeah.
So that's where there's opportunity for a VC. It's not a bank finance project, it's more a VC project, right? We are looking to invest in something which can really handle the plastic.
Right, so it's really a pitch. It's a bit of a punt, and will it work or will it not work?
Yeah, and that's where we play. That's where
Yeah.
we play, right? And happy to take those punts if somebody is willing to say, okay, this way I'm working to reduce packaging and remove that. Because I believe that the policy does help, but generally, majority of time, innovations come before policy.
Absolutely.
You know, policy comes much later when the innovation always precedes policy. And that's where we want to put in, and that's where we want to put in some capital and see.
Yeah.
And that planet profit, people, planet, profit, I think you cannot see in the serial, they are horizontal, right? You have people, planet, and profit all together. That's what the role of a technology is.
Yeah, absolutely. And it's very interesting because I think you can have innovation in technology as well as innovation in policy, right? But policy is probably always struggling to keep up because innovation in technology is so quick. So we're coming to our wrap-up remarks, and I sort of warned our panelists that I was going to ask them for a tweet. It doesn't have to be a tweet, but it has to be as short as a tweet. What is your take-home message, Hong-Sin, for this audience from today's conversation about Show Me the Money in Greening Finance?
If you visit my website, you will see this statement: funding should never be a showstopper to any genuine individual who wants change or a better world.
That is beautiful, and I hope it never is. I hope it never is, because a good idea should find the money. I've always said that good ideas are more scarce than money, and I've yet to be proven wrong. Shailesh, you're...
What to say? I think my message for the policymaker will be that make capital accessible for technology, right? Because that will solve. Nothing else will solve. And that's where I am.
Interesting, thank you. Make technology accessible, financing technology
Yeah.
for accessible. Good. Okay, thank you. Angela, your take-home point?
Yeah, so it would be policy to create an enabling environment for more investments, also in investing in project development and more catalytical support.
Okay, can you say that again in a way that my grandmother would understand
Using hashtags?
No, she wouldn't understand the hashtag. Just say it one more time in a way that my daughter, who's 19, would understand.
Yeah, catalytical support from policymakers
Yeah.
to create enabling environments for these investments.
Okay, so you want policymakers to wake up and understand that their decisions are going to vastly impact finance in the future. Okay, that's a very good message. Kalina, your take-home message.
Before I say the message, I wanted to just follow up on a point you said. I mean, in order to make change, which is the topic of this conference, all of us have to play a role. It's bottoms up, top down. All parts need to follow. And I completely agree with you that digitization is going to make a huge difference in the world. It's a game changer for many that we'll see. So my message is, it takes a village.
Wonderful. That is a beautiful thought, and it does take all of us, and we are much stronger. I personally feel like we have to change the way we think about competition. We're born and raised to think that there's only one winner, but when there's only one winner, there's a lot of losers. And another way of looking at the world is, what if we all could win at the same time? And that maybe is a big lesson for finance as well, because finance is about picking the winners. But maybe there's a way that we can expand the bottom line to a triple bottom line. Anyway, I'd like to thank you for being with us for this session. Thank our panelists for joining us today. I'd like you to give them a big round of applause.